giving you insight into what's going on with the different sectors that are moving, talking about the bifurcation in the market. We're going to talk about Broadcom earnings. We're going to talk about the SpaceX IPO. We're going to get more into whether Bitcoin has anything to do with it, and much, much more. So folks, if you're watching me on Twitter, like and subscribe, give us a heart. If you're watching on YouTube, give us a follow. I'm Mark Sebastian. It's time for the state of the market. Roll credits. Good morning, everybody. I'm Mark Sebastian, your only option. I am the founder and CEO of OptionPit.com. Welcome to State of the Market. Let's kick things off by looking at what's moving at pre-market, and we're going to start with Broadcom. It is down 15%. Now, it had a really nice run-up into these earnings, but is essentially given away everything we've seen out. I'm not sure.
You would love to look at it.
Yeah. Thank you for reminding me. Could have reminded me while I was talking to Garrett. I'm just kidding. Good morning. So here we are. Now you can see the chart. We have now given away everything going back to basically April 29th. Mostly just this big run up into earnings. There was some excitement. So let's break down, and we're going to break down these earnings in a second, but they're not the only one taking some pain. Chips as a whole not having a good morning. Marvell is down pretty nicely. AMD is taking it on the chin. Intel is down. Even the mighty NVIDIA is down. CrowdStrike reported good earnings. They're down on it. Ciena, the networking company, basically every earnings that was announced over the last 12 hours, not looking good. We got another one from Lululemon. There's finally we got a winner. We're up 1% out of Lululemon. Earnings as a whole really weighing. And it's primarily tech earnings, and it's primarily the SMH. Garrett and I were just talking about that run-up. SMH is down 4.5%, which sounds like a lot until you realize that puts us where we were on June 1st, a whopping 3 days ago. The question is this the beginning or the end? And a thing to kind of notice about that is we're down 4.5%. This red line represents option prices. What do you notice about that? Yeah, pretty interesting, right? Option prices are falling with SMH. But as a whole, not a great morning for chips, SMH names as a whole. That's weighing on the NASDAQ. So running through markets themselves, let's hit these indexes. The Dow is up 1.5%. The Qs are down over 1%. S&P is flat. IWM is up 0.75%. And RSP, which is equal weight S&P, is also up 0.7%. So what does that tell us? That tells us that this sell-off that you're seeing is actually narrow and specific. As a whole, the market is actually up. And anything non-chip related is up. The issue is chips are 25% of the S&P 500. They're not so much of the Dow Jones or equal weight S&P or IWM. So Thursday's theme so far is this is a chip sell-off, not a market sell-off. Looking at oil, as you can see, USO, after news on Trump saying he's not going to fully re-escalate the war unless there's U.S. troops killed, you're seeing oil sell right back off. That is giving bonds a little bit of a boost here. Bonds did have a rough go the last couple of days. I would like to see them for the Dow to continue to rally. Qs may be taking a breather here, but for the Dow to continue to rally and the S&P to hold firm or, slowly squeeze higher, we're going to need bonds to hold up. Looking at VIX, and this one I think is kind of interesting and is telling. The Qs are down over 1%. The S&P is down, and you've got VIX down. Again, this takes us back to that SMH story. SMH, 25% of the S&P. As it's sold off as it's stopped exploding higher and has started to sell off, you're actually seeing premiums come out of the S&P 500 of SMH. That is interesting. We're going to talk to Andrew here about that in a little bit. Looking at our individual sectors, what you're going to find is XLK is not having a good day. It's down about almost 3%, but just about every other sector looks strong. Even the names that have been weak, XLF is up 2.3%. Industrials are up 0.5%. Energy, despite the solvent oil, relatively flat, down about 0.8%. So by and large, you've got about 8 of the 11 S&P sectors rallying today. It just so happens that those 3 sectors that are selling off are some of the biggest ones, notably XLK. All right, so now let's pivot and do a little bit deeper dive into Broadcom. Broadcom is down, as I said, about 15%. Now, let's talk about these numbers. They beat on revenue by about $100 million. They beat on earnings per share by about a nickel. They beat 244 versus 239. They beat on EBITDA by about $300 million. Free cash flow, and this is where we start to hear some of the bad news. Free cash flow was lower than expected. AI semiconductor revenue missed by $500 million. It's up 143% year over year, but that AI semiconductor miss, that has people not too happy. Their guidance, they didn't really raise revenue guidance very much, from 28.7 billion to 29.4. They didn't really change their margins, and they actually failed to raise their AI networking gigawatts. And the market did not really like that at all. They're also seeing margin compression a little bit from Google TPUs. So the Broadcom story, and remember I said this when NVIDIA earnings came out. What I said was, when NVIDIA fails to raise guidance in a significant way, that is going to signal the top. Broadcom is a great company. It has had a spectacular year. It was $258 a year ago, and it peaked out at $480 on the 3rd. a 230% rally, or a $230 rally, almost 100%. On the 2-year, it was up more than, it went from 130 to 480. That is almost a 300% rally over 2 years. We may finally being at a point where we've kind of hit that peak ability where they're able to keep guiding higher. And I'm interested to see what's next for these sectors and industries. To kind of bring us some guidance on this and to help me talk through our next story, because he's been writing about it, is our own master of the two-way trade, our director of education and head option trader. He is Andrew Giovinazzi. Good morning, Andrew.
Hey, Mark. How are you doing?
I am doing excellent. Good morning. How are you doing?
Oh, you've got your red shirt on. Why can't I remember that?
It's all right. Some people, it doesn't feel right to wear a red shirt on Thursdays. And if it doesn't, then you don't have to wear it. Just for me, it does. Now, Andrew, I want to start with these Broadcom earnings because they were clearly a disappointment. And they're weighing on SMH and the chips as a whole. SMH has fallen to levels we have not seen since June 1st. And yes, folks, I'm saying that in jest. But I don't know if you just caught what I was saying at the end, that the lack of raise, it's not that they're not hitting their numbers. It's not that they're not growing. It's that the guidance of growth is no longer, appears to be the hockey stick of raising guidance might have ended with Broadcom.
I think last year you said it really well. You said things have to be like perfect, right? Because the multiples and the levels that the stocks have already achieved they're already looking for perfect, right? You can't have a $1 trillion market cap or $600 billion market cap be trading at 70 times earnings and the sky's not the limit every quarter. Like it only works one way. I mean, that's as long as we've been doing this. You have to keep it up. Yeah, and I think you're right. When Nvidia does say, well, not that we see demand flattening, but demand growth maybe, right? Just on the margin.
The growth of growth
might be start to be the end of it.
The growth of growth is really kind of where we're at, right? These companies are going to still grow, right? But how much, at the rate at which their growth may be starting to decelerate a little bit.
Right.
So, so they're still increasing, they're still speeding faster. It's just the rate of change is starting to slow down a little bit. And that may be an important moment here. And this Broadcom earnings is one to write down and keep an eye on for, I think the chip sector as a whole. We'll kind of see how this plays out over the next couple of days. If this thing gets scooped up and is $500 next week, then I'm wrong. But this maybe doesn't get crushed over the next couple of days, but maybe we have some boringness in these chip names for a little bit.
I mean, for the first time in a bit, I think it's a Wednesday, right? I mean, you actually have a VIX down on the day. I mean, the Broadcom earnings came out. They were still, they hit their numbers, quote unquote, but not enough to get everybody excited. And you have actually volatility actually down on the day. And I think to your point, vol goes down when some of that upside starts to come out of the picture.
Absolutely. Plus, really, the market is up. It's just the mega caps, and which are chips, are down today. The Dow is up 1.5%. You've got strength in financials, a lot of the other sectors. it's just technology and chips are not having a great day. That's why you see the bifurcation between the Dow and equal weight and IWM, and then the selling in the NASDAQ.
Right.
So
maybe
I want to hit on our
software.
next. Maybe it is time for software. I want to hit on my next story because you've been writing on this, and it's SpaceX. Now they announced kind of details on their IPO for the 12th. And Andrew, I'm going to read you a few things, and then I want to get your reaction here. All right. They're only selling about $75 billion worth of stock total shares. They're going to be tough to come by. All right. $135 a share. All right. SpaceX at those levels would be valued at about $1.77 trillion. This would make it more valuable than the following companies: Meta, Broadcom, Taiwan Semiconductor, Tesla, Micron, Berkshire Hathaway, the combination of Chevron and Exxon, the combination of AMD and Intel. And it lists on the 12th, and options, I believe, will probably be approved shortly thereafter. The 12th is next Friday. I would imagine we'd have options middle of the week, the following week. This is, I have not seen an IPO like this since Meta. And there are some things that I am doing around this. What's your take on this IPO? Because I remember Meta, but I don't know that we've seen anything like this before.
So there's never been anything like this before. Never ever. It's by far the biggest IPO. It has also huge already institutional ownership. Almost every big company that you can think of, kind of, when SpaceX was raising money, like Elon Musk is very good about how he's smart, how he raises it, but he got it from a few key places. But and they've been selling shares over time. On the now I'm not going to call it the secondary market. That's what we trade on, a secondary market, but sort of the pre-market, pre-IPO stage market, the VC market for that. So it's widely, it's pretty widely held already, but 1.7 trillion. It's also validating. Sorry, I got some of my students here buying some VIX puts, and I'm clawing in the same and doing the same thing. So in the old days, right, you had these huge IPOs, like, when I was starting out, well, not starting out, but, in the 2000s, right, you IPO'd and they would only sell a little tiny slice of the company to the public. And you had these huge launches, right? So, we goes public, at 135, they only have a small amount of shares relatively. Not enough people can get in, and then the stock launches afterward, which is what happened to Facebook, as I recall, right? So this playbook has been played for as long as I've been doing this, and probably 100 years before, where they just sell a small amount of shares to the public and then they bid it up. And who knows what will happen afterward? But there's also a lot of knock-on effects. Because if SpaceX can get a $1 trillion IPO price, Anthropic could get a $900 billion price, or ChatGPT could get $700 billion. So, and all of a sudden, companies that own stakes in those stakes are now going to show a huge pop on the balance sheet. So there's a lot of running into SpaceX. There is this IPO. There's going to be a lot of just knock on positive effects, where investors are going to say, what company owns what part of what, and what could that be worth? And then SpaceX, when it goes, that will be people, all of a sudden everything will be realized, right? The dollars will be realized, and investors can get it, they can get excited about that. So there's other stocks around that own pieces of these companies that could all of a sudden be worth a lot more money than everybody thinks, at least for a period of time. Now, it's probably a good place to exit, at least short term, those positions. But it's, you forget the frenzy, the animal spirits that get people into the market in the first place. They want to see an IPO gain like this. So I think it's important for investors that the run up to this, I have a hard time believing, that it's not going to be bullish. Like from now until at least the IPO date, there's too much anticipation in it. And generally when there's anticipation, people buy. It's like Cabbage Patch dolls in the 80s. Everybody's lining up at the store to get their doll. It's going to be very similar effect. It's kind of always been like that, and I don't expect that to change much.
Yeah, here's kind of my take, and I'd love your reaction here real quick. SpaceX is going to suck all the air out of the room next week. The run up in space stocks into SpaceX is over. People are accumulating cash so that they can buy SpaceX or trade around SpaceX. SpaceX being as big as it is going to put selling pressure on the stocks smaller than it that are in the S&P and the NASDAQ 100. So I'm looking at Meta, I'm looking at Tesla, I'm looking at Broadcom, I'm even looking at some of the big names. It's going to be the 7th largest company in the world when it lists. There is going to be selling pressure to buy SpaceX as it starts to enter these individual indexes. It's not going to be added to the Qs right away. So you may see some Q pressure while funds are adding SpaceX in anticipation of it being added to the triple Q on its next rebalance.
Right.
This is going to cause 2 to 3 days of anomalies starting Friday, probably into Tuesday, of the market being choppy and probably a little more pressure on the triple Q. I think part of the reason you're seeing major selling in Bitcoin is because of people accumulating dollars to buy SpaceX. Similar type of buyer.
Or SpaceX Andrew, selling Bitcoin. Selling their Bitcoin to raise cash.
Bitcoin to buy SpaceX. You tell me they're not the same investor, Andrew. Tell me that a Bitcoin holder doesn't want to own SpaceX.
It has to be the same guy. Yeah.
It is the same guy. It literally is. Right? The person that has faith and trust in Elon is the bows to the altar of Elon is a Bitcoin holder. And there's a big group of them in the retail space. That is the group that is selling Bitcoin. Andrew, we got an end of pattern day trading today. Many brokerages are ready for it and are approving people today. Robinhood, Webull, E-Trade, a lot of them are ready. Schwab is going to be ready on Monday. This is going to have a profound effect for my trading. This makes 0DTE that we run in SPX. I put an editorial out about it. We used to have to spend several hours a month teaching people like backdoor ways to day trade without day trading. I don't have to do that anymore. For in Alpha AI, there are single day short squeezes where you can see them start to happen in the morning. And Andrew, stop me if you think I'm telling tales outside of school, but how often do you see a short squeeze start in the morning, top out at 2:30 in the afternoon, and then pull back into the close? And that's something that a lot of my Alpha AI traders haven't been able to trade that we're now going to be able to trade because of pattern day trading. Right. What are some ways that pattern day trading, the lifting of that, is going to make your life and your traders' lives easier?
My life is not going to change tremendously. But I think for the students, they won't have any. Also, when I put trades on now, the biggest problem was like you put a trade on in the morning, and then at the end of the day, it just so happens that like you get a great result.
Yeah.
And at least in weekly profit cycles, Rip Zone, like almost any of my services, really, it's like I don't want to put on a close in one day because a lot of people can't close the trade.
Right.
So I could send an alert or something saying, hey, the trade's up a lot of money for one day. You might want to spread the trade out. Now it'll be a lot easier. People can just close it without any penalty. And I think overall it's going to be a lot easier for students. So running services, I think, and running trades in general, it should be a nice net positive, to be quite honest, because it'll be a lot easier.
I think as I look at our different membership stacks, this is going to make a lot of people lives much easier, and it's going to make them much happier. Now, and so the two questions I always get is, one, people are asking me about this pattern day trading rule left and right. The other question, I actually got this from Jeff Bishop yesterday when I was doing my podcast with him, the Jeff and Mark show. He was looking for ways, because he doesn't trust this market, right? He saw the run-up in SMH. He's seen the run-up in the Qs, doesn't trust this market, but understands that this could go on for a month or 2 months before something major happens. And the question I always get is, Mark, how do I protect myself in a market that is continuing to just rally parabolically, but I don't trust? And you've developed the perfect approach in weekly profit cycles in your what you call two-way trades, short,
right,
long. And in order to make money, just to make money, you only need what? 2% of movement a month?
2% a month. 2%
you make
a month.
2%
so
a
right
month.
now, what you want to be able to stay long, but have something a little conservative. You want to have a put something if you have that, like Broadcom, right? You have the Broadcom news and the market sells off a little bit, or the whole Iran thing just kind of unwinds and goes bad, and we're back to 7,000. Remember, we were at 7,000 what? 6 weeks ago, something like that, 6-7 weeks ago. That would still put us up for the year. Just remember that, like where we are to 7,000 would put us up. So you want to stay aggressively long. Remember, when you had the .com boom from the bottom, basically stocks, and I think the bottom was what, set 1977 or 1997. Sorry, stocks were up 500%. From there to the very peak top. Okay.
Yeah.
Since just October 2022, we're only up 150% stocks. So there is plenty of room for stocks
there is
to rally, and you kind of sit there and you miss the whole thing because you're not long. You keep trying to fight a tape that keeps going up. So you want to be able to be long, but have a little hedge in your back pocket. So again, that's essentially what weekly profit cycles was designed for.
Right. You've developed weekly profit cycles so that you don't have the FOMO, the fear of missing out. You're involved. But if the market does collapse, we come in and we're down 2, 3, 4, 5%, the weekly profit cycle portfolio is going to produce a very, very nice day for you that is going to make up for a lot of the pain in your long portfolio. Andrew, you're holding open houses this week for weekly profit cycles. You had one yesterday. How can people get involved with weekly profit cycles if they want to, one, see your open house yesterday, and two, get access to the follow-up open house that you're doing on Friday?
Right. So there is links are up there. You can go check out the in the chat. Check out the links above. I'm also going to be putting out some a video just describing the trades for people. So if you can't make the open house, you can see what the trade is, and also subscribe for the next. Again, I think the market that we have is probably not going to change a whole lot. Maybe the next month. But certainly 2, 3, 4 months down the road, we're going to be in this AI cycle until it's over. And we'll all know when it's over, when everybody wants to hide under their desk. Okay, that day's not today. It will be at some point because it always is, but it's not today. So you want to be able to take advantage of it. So grab the link that's in the chat above, subscribe,
Right there.
and take a ride with us on
Yeah,
what's going to be a second great half of the year. I can't believe the year is almost half over.
Yeah, I mean, weekly profit cycles is kind of like being the tortoise in the hare. If the hare was wearing the tortoise's shell, that's kind of what you got our weekly profit cycles. You get the upside, but if the market does roll over, you've already got your desk to hide under directly on your back, and that's what I love about that approach. So, folks, join that open house. Yeah, join that open house and click the link. Join us. We are up against it here, folks. But I hope you guys are enjoying and checking out Garrett. He's on every morning now at 9:20 p.m., 9:20 a.m. Eastern time, leading right into this show. Then you're going to see this show immediately following. Again, if you're watching me on YouTube, watching me on Twitter, like, subscribe, give us a share. If you want access to the weekly profit cycles open house, email my team, support@optionpit.com, and they will send you the link. Or better yet, join us live here and interact in the chat, and feel free to ask us questions. Andrew, thank you so much for joining us here today. I will be back tomorrow at 10 a.m., but join Garrett at 9:20. So for Andrew Giovinazzi, our head of education and our director of education and head of option trading, the master behind the two-way trades, I am Mark Sebastian. I am your only option. I will see you tomorrow at 10 a.m. Thank you so much for being here. And as always, thank you, Amin.